Valerie, do you buy in to this reflation theme, like sell tech, buy financials kind of thing?
We generally stay balanced in this environment. So we've seen periods during which value has outperformed, which has been the case really if you look at it on a trailing 1-year basis. But if you look over a longer period of time on a trailing 5-year basis, growth has significantly outperformed. And so my perspective is it's important to remain diversified in your portfolio in terms of the factor exposures in the same way that you maintain a level of diversification across sectors, because these regime changes can happen very quickly. And I think that over the long term, obviously depending on your time horizon, it really inures to your benefit to maintain a level of diversification.
How do we think about that diversification? A lot of people talk about barbell strategies. In fact, so many people talk about barbell strategies, I'm almost tuning it out. But is that what we need to be thinking here? You've got the kind of the reflation, the banks, whatever it is on one hand, and then you've got the kind of the technology growthier end. Do you basically, is that the strategy at the moment, or does it need to be more nuanced? Because if you take a look at the numbers, that does seem to be the kind of the way that we're pivoting.
Well, we have exposure to both in the portfolio that I manage, and it's a U.S. large cap core portfolio that also focuses on environmental, social, and governance issues. And so, yes, we have exposure to financials, we have exposure to technology. We're actually underweight energy, which you were just discussing. But I want to talk a little bit about the COVID issue, because that, to me, is very important. And for some reason, we seem to have forgotten about it. But COVID is certainly not over. It's not over in various regions of the country, and it's certainly not over in various countries around the world. And for large cap companies, they have exposure to global markets. And that's what we're seeing now in terms of some of the supply chain disruptions. Many of them are, in fact, COVID related.
So is there a sector that is more insulated from that? And I'm bringing us back to financials in some ways, because the supply crunches that we're seeing, in part sparked by COVID, financials can be relatively immune from something like that, plus take advantage of any kind of reflation.
The only financials that might be somewhat immune to that would probably be some of the regional banks. But if you're investing in large money center banks or large financial institutions, they too operate globally. And obviously, much of their business is affected by yields. So I think that it's very difficult to insulate yourself from this exposure. Perhaps if you look more in the small and mid cap segment of the market, you'll find companies that are more sort of focused on the U.S. market exclusively, right? And so then you may not have the same type of challenges that you do with the large multinationals.
Valerie, I'm really struggling with this concept of reflation at the moment, because it doesn't feel like reflation. It feels like we're struggling. The data are not good, and they are rolling over. I see what is happening with companies, and as you say, they're talking more and more about the supply chain shortages that we're experiencing, and that's going to throttle back growth. Does this feel like reflation, or does this feel like something else? The conversation about stagflation has started to emerge recently. Higher yields, yes. Does that necessarily mean higher growth?
I don't think it's implying stagflation. I think what we're seeing are some of the challenges of reopening and really increasing output. We had a surge in aggregate demand coming out of the pandemic, and the output or supply simply has not been able to meet that demand. I continue to believe that although some of this inflation may be higher for longer, I think the bulk of it is transient, with the exception of wages. And what we hear from companies across sectors is that it is really more so of a employees market than an employers market at this time, particularly at the lower end of the spectrum, but really across all segments.
So then based on that, what areas have better pricing power? I mean, so far industries have been able to pass on the price increases, and I'm wondering which ones have extra room to do that and which ones are kind of maxing out a little bit.
I think you see that within sectors, it varies considerably. So within consumer discretionary, there are certainly retailers and brands that have the ability to pass on costs to consumers. And then also, even in some aspects of technology, there are some companies that have proprietary technology that is mission critical to organizations, and they are therefore able to pass those costs even on to other companies on a business to business level. So I think it's very company specific, and we're probably going into the next upcoming earnings season going to see a wide range of responses here.
It's going to be. I think it's good. I think it's going to be a really interesting earnings season. I saw what Nike had to say the other day. The supply chain bottlenecks they're experiencing. You hear company after company talking about this. Valerie, do you think the market has priced that in? Do you think the kind of the margin hit, the middle of the P&L story, has been factored in yet? Because the expectations continue to be that these companies are going to continue to be able to power through. Is that going to be the case?
I don't think it's necessarily priced in. I mean, the corporate profits have been so strong for the last several quarters. It's just been, phenomenal performance. And I think while people do, in the back of their minds, understand that we have these issues with supply chain and COVID and everything else, I don't know that it's really baked into the numbers, so to speak. So I think there probably will be some surprises. But quite honestly, those could create buying opportunities as well, as companies that have healthy outlooks over the long term perhaps have a little pressure on their stock price.